Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, April 10th, 2020. As always, hit the like button, subscribe to this channel, and share this video with others. Now, I got a new microphone, so hopefully the sound is much better. Do let me know in the comments if you like it, if you don't like it. Also, just make comments if you have any questions. Like, for example, there is a gentleman that likes to know about Russian companies, so I'll cover one of the Russian companies today. Stocks overcome major resistance. We'll look at where that major resistance is. There's another huge test that's coming up around 2938 level on S&P 500. We'll look at other markets that are hit hard by the COVID crisis, Italy and Spain. And as I mentioned, we'll look at one stock of Russia, one of the oldest companies. It's called Sberbank. Federal Reserve has stabilized the bond markets, and they just purchased junk, muni, and corporate debt. Treasuries may still pull back. We'll look at where good levels are to be buying treasuries. Normal bearish action on oil. I don't see anything abnormal about this situation with oil. Despite strengthening dollar, gold is close to multi-year highs, so we'll look at that, and we'll look at Bitcoin and Ethereum as it is ripe for another leg down. Also, we have a new product which is very close to be finished, and that's signals via the Telegram app, and cryptocurrency algorithmic trading is coming up very soon, so stay tuned. Alright, so here's S&P 500 futures. On this chart, what's important is you can see a big drop, obviously. In March, enormous, basically, drop. A rally towards the red line. You can see several touches of the red line. So again, about these lines in the chart, first of all, and that's my proprietary trading indicators for they're available currently for TradingView.com. You can see where I'm hovering. TradingView.com is this interface, this black screen, and these lines. You can have them on your chart, so trading will be simplified. All you have to do is just go to MasterChartsTrading.com, one word, MasterCharts Trading, and sign up for the trading indicators. Then I will open the door for you, and you can have them on your chart on TradingView. Did that make any sense? If it didn't, make a comment. If it did make sense, then sign up. Okay, so here's that resistance. So these indicators, my indicators, they just basically show you, they actually painted, they draw support and resistance. Some people will say, well, there is this resistance because of the lows from the action on March 9th, 10th, and 11th. But beginners really don't see it. And if I turn off the indicators, I'm going to turn them off. Do you really see resistance here? Do you really see support? I don't. Now if I turn them back on, it becomes clearly and obvious. So we have a big drop, and now the lines will act as resistance because we're in a bear market right now. But the good news is we're very close to bullish levels. So the bullish levels are currently at 2938, right there where I'm hovering for S&P 500. Very close. If we close above 2938, then this collapse basically is over, and we most likely will see a V-shaped recovery or a W-shaped recovery. But the point of the matter is where we will no longer be in a bear market. As of today, as of recording of this message, on the 9th of April, or rather 10th of April, 9th of April for Friday, I'm sorry, this is because today is Good Friday, so there is no price action. Yesterday was the Thursday, 9th of April, today is the 10th. So if on, let's say, Tuesday we close above this blue line, then that's it. We are no longer in a bear market, and we will look for bullish opportunities to buy. But right this instant, I still think we're in a bear market. And if we roll over and we close back below 2632, then I'm almost sure we're gonna see a retest of March lows. And then the opposite is true. If we close above 2938, there's almost a guarantee of new record highs. How is it possible? With the collapse of worldwide economy, with unemployment sky high, most likely going to be in the 30% range unemployment. So think about a third of the country is out of work, yet stock market is doing just fine. So this is one of those things where we just need to accept it and say, okay, this is two different things. There is the economy and the people where they live, like the real economy they call it, and then there is the stock market. And if we compare the two, they may or may not be in lockstep with one another. So I would like to look at the stock market separately from the real economy, so to speak. I'm not an economist, and I don't analyze fundamentals at all. So on this chart, I made nothing. Like, there is no speeches, there is no events, there is no Federal Reserve action. It's just price action. And this is why I like technical analysis. You don't really need to analyze news or anything of that nature to be able to successfully make money in the stock market. So S&P 500 again approaching bullish levels. Here's the same level for S&P 500 ETF SPY. It is at 293 and 77 cents right there. So if it breaks above it, if it closes above it, then that's it. We're in a bull market and we should start looking to buy. IWM, the small caps are lagging. They're behind, but they are right this instant at resistance. So if we see short sellers come in here and start pushing the prices lower, then I would not be surprised. Dow Jones, same as S&P, approaching bullish levels, and QQQ is also very close. The Nasdaq is also very close to bullish levels. So we're approaching those levels now. Even though they're extremely close, this is like a few percentage points, we haven't gotten there yet, and many things can happen before we get there. So again, I am not a perma bull, I'm not a perma bear. I'm looking at objective evidence, and right this instant objective evidence shows a couple of ifs. So if we close above the blue, then we will start buying. If we close below the red, then most likely we're going to roll over and continue into the bear market and maybe take out the March lows. So a couple of interesting charts. Here is EWP, Spain. If you haven't heard in the news, worldwide and in Spain in particular, there's a lot of incidences of COVID, lots of death, lots of grief, and just confusion and all that. So the stock market has reacted negatively to all of this, and obviously the shutdown of the economy, to the lockdowns. The rebound so far was quite small. You can see where S&P 500 is already above the red line and approaching bullish levels. The Spanish stocks are not even close to the red line yet. So this type of setup most likely will cause the short sellers to come out when or if the price gets up to this red line 2230. So if I was shorting, then I would be shorting there. But once again, I am not a big fan of shorting stocks in general, because for example, Federal Reserve just came out and said that they'll pretty much just buy everything. So as far as Spain is concerned, right this instant, it's still in a bear market, but it is approaching, and it is also approaching levels where short sellers might just come in and just collapse the prices. Very similar picture at EWI Italy. You can see a big drop, a small rebound, and it's rebounding towards those resistance levels. For EWI, the Italian ETF, the resistance is right there where I'm hovering at 22.56. So if I was buying puts, I would be buying them there, based on the price action, of course. If you sign up at MasterCharts Trading, I walk through this quite often with my subscribers, and I really help them out, I think. So do consider signing up so that you can have these lines on your chart, and also my explanation and personal support. I do personally support my clients, obviously. Okay, and here's that Russian stock, Sberbank. So I speak Russian, so I know what it means. It means savings bank, сбережения, savings bank. So apparently I didn't know that, but I looked it up. Sberbank was founded 1841, so it's really old. It somehow survived the communist rule, and now of late it's actually traded as a stock. You can see it's traded on Moscow Stock Exchange, and you can see that in general stocks worldwide correlate highly to one another. In other words, they move in lockstep with one another. I just showed you Italy, EWI. You can see a very similar picture. There's Sberbank, and it's a similar picture. Big collapse, now a rally. So this rally towards the resistance, basically. Here's that resistance. The resistance is at 20914. So if I was shorting it, I would be shorting it there, depending on price action. So this is the essence of trading, pretty much. You just look for the direction. Number one, are we want to be buying or selling? Or if we don't want to be selling, at least do we even want to be buying? Sometimes cheap stocks are cheap for a reason. So this is one of those reasons. We have a big drop, a move higher, and that move higher is to be shorted as of right now. It could change in the future, but if you want to be on the correct side of the trade, on the correct side of the market, then you need to have a directionality of the market. My indicators help you with the directionality. So in this case, the Sberbank is in a bear market, and it should, or rather, if you just want to do nothing, then it's probably the best thing. But if you have, for example, stocks of if I had Sberbank stock, and for some reason I didn't sell it here on the 27th of February, where I'm hovering, then I would be selling it now, because now would be a good time to unload my shares at a decent price. Could I be wrong? Absolutely. S&P 500 could turn around into the bull market, and in that case, then I wouldn't be shorting. I wouldn't even be thinking about shorting. I would only be thinking about buying. But for now, I think opportunities are there potentially to short. Okay, TLT, treasuries. So bond market, well, treasuries didn't really react that much, but the other bonds, the lower grade ones, reacted just explosively, and I'll show you in a few seconds what I mean. But TLT, the treasuries right this instant are, well, they had a big run. We actually traded them. These up arrows right there, these are actual alerts to my subscribers at MasterCharts Trading. You can see an exit alert right there on the 11th of March, so it's a nice gain. You could have also exited at the top, but how do you know it's the top? You never know it's the top. So right now what we see is a normal kind of unwinding of this really strongly overbought condition that occurred on the 9th of March. So this unwinding, I don't think it's yet done. I think we're going to see another retest of the blue line, and if it touches the blue line at currently at 158, I would be buying it there. So what I need to see is I need to see a touch of the blue line and then a close above it. It's my trigger. So once I see that, that's it. We can start buying. TLT treasuries represent sort of a defensive sector, defensive tilt, and right now there's plenty of reasons to be defensive. So LQD, the investment grade corporate bonds, So you can see just enormous moves. We did trade LQD. I think alert was sent, but a really long time ago. So let me show you that alert. There's that alert right there. Aren't they beautiful sometimes? 31st of January 2019. So trade was over a year. Plenty of opportunities to exit. So complacency, of course, is what kills performance. I would have been exiting somewhere between 10th of March and 11th of March, right there. Here on 12th of March, etc., I would just say completely get out, run away. So in this few days, Federal Reserve came in and just started buying everything under the sun. And here we see a actual alert again right there on the 30th of March, and then another alert right there on the 7th of April. This is to my subscribers, and you can see the price already made a nice move. So that's like almost 5% move, and that's in investment grade corporate bonds. You know, right now the way the Federal Reserve is doing things, we just need to look at the chart. The chart is saying buy, so we're going to be buying. I don't want to think about, I don't want to overthink it too much, but is it fair? Is it is it a normal thing for Federal Reserve to be buying various bonds? I don't know. It doesn't look normal to me. It doesn't look fair. It looks like the markets are indeed rigged. But the chart says buy, so we're going to be trusting the chart. Here's municipal bonds. Very similar picture. Municipal bonds just completely collapsed. Federal Reserve came in, started buying. Again, alerts. These are actual alerts. We're buying municipal bonds right now. And also junk bonds. I wanted to show junk bonds. For some reason didn't show, but junk bonds, JNK, same thing. Price collapsed. I would have exited right there on the 25th of February if I had any positions. We just follow the system. We don't. That's the thing, is 401ks, for example, people have like junk bonds in their 401ks or their stocks in 401ks, and then they're telling me like stories about, oh, how I lost so much money, and I'm asking them, how come you didn't exit? And they're like, well, I didn't even know I could exit. So yes, you can change allocation in your retirement portfolio to have no stocks and just have cash. So that's what I did back in February, and I had no stocks, obviously no bonds. I had TLT for a little while, but then I just closed everything out, and I was correct. One of the biggest things with trading is avoiding losses, and especially avoiding large losses. You cannot avoid all losses. You will have small losses, but this type of losses is the ones that just completely kill your performance. And the only way to deal with it is just to say, okay, I was wrong, or my target was hit and now my stop is hit, and why am I not exiting? It's purely psychological. So you need to overcome your psychology of, well, yes, you have to cut your losses. So that's just something that you need to learn as a trader. All right, let's look at oil. I've been reading something on Twitter that for some reason this particular candle from 9th of April looked somewhat, abnormal. I don't see anything abnormal with this candle. I do see a bearish security. There's the actual breakdown that occurred on 23rd of January. We could have shorted it right there for a 64% gain, or you could buy puts, and if you play options, this you probably would have just retired from this trade if you shorted it right there on the 23rd of January. And I'm not making it up. These indicators are done, they're calculated in real time. So you can see that they're being calculated. They're not drawn. These are actually calculated indicators. So right now, bear market on oil, again, I don't really analyze, what Russia said or what Saudi Arabia said or what they're going to do, and I don't really need to know any of that, because I already know back in January of this year that we're going to see a bear market on oil. I didn't know how big it's gonna be, but I knew that the price will go down. If I knew it was gonna go down 64%, obviously I would have opened the short right there. For some reason I didn't open the short here. I don't remember why. Sometimes we just miss a trade. Unfortunately, sometimes we miss a huge trade like this. But right this instant, I want to wait and I want to see a bounce. I personally like to see a stronger kind of bounce. So if it gets up to $37, then we could look for opportunities to sell it, to short it. If it continues higher, it needs to get up to $48 to become to re-enter a bull market. I don't see it happening right this instant. So dollar index, forex trading. So we're in a bull market for dollar. Somehow, intervention by the Federal Reserve really makes very little difference in the price of dollar versus other currencies. And the weird part is, we're just going to be basically trading dollar on the upside for now. Despite all of the intervention. When or if it turns around, we'll start shorting dollar. But for now, the weird thing is dollar is in an uptrend, as is gold. So this is what kind of is weird. So this is gold XAU USD approaching multi-year highs. Again, right there, 23rd of March. I actually opened the position GLD. I bought GLD right there on 23rd of March at 146, I think, and now it's 158 and it's approaching new records. So it looks like it's gonna break out to new records. For me it's wonderful. It does look like inflationary pressures are picking up, especially with all the quote-unquote money printing throughout the world. Okay, so to finish it up, let's look at Bitcoin and Ethereum briefly. So last week I said that I would be shorting Bitcoin basically, and yes, I would still be shorting Bitcoin. In fact, if I could open a short right this instant, I would. We're in a second, I'll get to the algorithmic trading, and coincidentally that's the way we're going to be trading various cryptocurrencies, but we're going to be trading them on intraday charts. So these are daily charts, but you can use my indicators to, let's say you want to trade on 15-minute charts or 10-minute charts. Yes, you can do that as well. So for example, in this case, there's Bitcoin right there, so you can see a breakdown where I'm hovering, and I would have shorted it right there for a sweet gain. So yes, you can use my indicators on intraday chart, on continuous instruments. So this is a continuous instrument. Also forex, like euro versus US dollar, it's a continuous instrument. So yes, you can use my indicators on forex. For example, here's the breakout rather, where I'm hovering right now for a sweet gain as well. What I would not recommend is using my indicators on intraday chart on stocks because of the gaps. See those gaps? So they throw the indicators off. So I would not be doing that. I would be trading stocks only on daily charts personally. Or if you're kind of like a ultra fast trader, then you can use seconds charts to trade options, which is workable. I'm actually doing it right now myself. So a couple of things I wanted to point out. First of all, we have the signals via the Telegram app. So basically similar, what I'm showing you right now, all of these signals like exit alerts, like buy alerts, sell alerts, etc. They will be configurable, and you can also you should be able to configure your own alerts. In other words, you will have you can use your own stocks, your own tickers, and enter them into the interface, and then you will receive similar alerts what I'm showing right now. Like for example, for GLD, for gold, that was an actual alert. So you can actually have them configured, and you will receive an alert to your Telegram app or to the email. So that's one thing that's coming up, and it's basically already working, but we just need to iron out a few bugs. Now, the other thing that's coming again is algorithmic trading. So it looks like we're going to be doing it on Binance. So Binance, for United States clients, Binance.us. Again, haven't yet, this is not yet live, but it's coming up. So perhaps you want to maybe open an account, etc. Now, Binance is a little bit weird because it is restricted for certain states. So Binance.us is restricted for certain states. Binance.com is not restricted. So that's, Binance.com is for non-United States clients. And what we will do is we will have people register on Binance and then send us an API credential. So we will be able to control your account with our robots. Obviously, we're not going to be able to withdraw money because it's all configurable. So it's all in the works. I would highly recommend you at least sign up for the interest list because we will be offering discounts, etc. on the available subscriptions once they become available. Now, what we have currently offering is we have 3 products. We have alerts, which is basically, things like this. For example, for gold, GLD, I would send an actual alert in your email, showing you if I would be buying or selling this security. On various, multiple stocks. I usually monitor between 100 to 150 to 200 ETFs or so and stocks. We will be restructuring this in the future, but for now it's still about the same. Also, you can get the trading indicators. Obviously, what I just showed you, these indicators, you can have them on your chart and you can just trade on your own. These indicators are available for TradingView at $29.95 per month, so you can sign up for the yearly subscription. And of course, the best value is to get both alerts and indicators, and right now we have a yearly sale. These prices will be going higher. Okay, if you have any questions, again, please don't hesitate to ask, and thanks for watching. Have another great trading week. Bye bye.